All right, and we are now live. How are we doing, Luke?
Happy days. Yeah, good, man. Good. Can't complain.
It's been a busy week.
However. Oh, I just sneezed. Thankfully I got the mute button in time. Yeah, it's been a really busy week. I think as we were talking before we kicked off, I had a video that I promised that I was going to get out, and it took me much longer to do. It's now been recorded, but I just have to push it out. I'm going to push it out on Monday. That's on Ample Fourth, which is a stablecoin project that has been fairly in the news lately, that a lot of people have been sort of jumping on board with. So I talk about that in a lot of detail, probably in more detail, and in my opinion, which is of course biased, a bit more accurate than what people are talking about when you have a look at it on news sites and stuff. Because something I'll talk about a bit later, but in all the research I've been doing, so Monday is going to be Ample Fourth, and then I'm going to release a video on Wednesday about DeFi. And a lot of my research, sort of as I've been doing it, is sort of, you realize that a lot of the people that are reporting on this stuff in a lot of the mainstream media kind of websites that aren't crypto-centric, like Forbes, or, other than Australian websites that I could list that all be irrelevant. And a number is that these guys aren't necessarily experts. Like, one thing that I read that really annoyed me in a Forbes article was saying that Ethereum was a DeFi project, which of course is ridiculous, because Ethereum may enable some DeFi projects, but it's by no means DeFi. Like, Ethereum has nothing to do with finance. It's a application layer that sits above a blockchain. It's nothing to do with finance. It's actually quite, it's not industry centric at all. So when people make these claims, and people saying Bitcoin was a DeFi project, which of course, one could argue that it is DeFi, because it is decentralized finance. It's a decentralized currency. Currencies fit under finance, sure, if you wanted to stretch that. But I think that there's this misunderstanding about what decentralized finance is, and how these applications, which make up the decentralized finance industry, are very different to many of the projects that we saw in, say, 2017. And we'll talk about that a bit later, which is the stuff about how these projects how they raise money, and how the differences between raises now and the different, and sort of how it is, how it was done back then, and the differences it has to, like, the end user, like the end investor.
Yeah, absolutely. Yeah.
Sorry, I just rambled.
No problem at all. I have a colleague over here actually that's been writing for CoinDesk as well, and she wrote an interesting piece about whether crypto is fintech. I think there's a lot of controversy. The hardcore crypto people being suggesting that it's not. And it's a completely separate movement, and it includes, themes outside of the actual financial related, products that are being released as well, and it's very community driven as well. So that was one of the arguments, but yeah, it's a very interesting piece.
I think you can't blanket call all of crypto, fintech, in the same way that you can't call all of crypto DeFi, or you can't, they all have their own categories they fall into. I would say that yes, some crypto is fintech. I'd probably say the majority I'd probably say all DeFi projects are in some way fintech, because fintech is a very general term, financial technology, anything to do with finance that fits together. But by no means would I say that crypto is fintech. All crypto is fintech, because not all projects, in the same way that Ethereum, for example, that we just talked about, Ethereum is not fintech. It enables, certain aspects of fintech technology. It enables, obviously, DeFi, which is fintech. However, I would not suggest something like Ethereum, Chainlink, any of these major infrastructure plays are in any way fintech, because they're not related to finance. It's more about, you know, access to data, doing things with that. I mean, even smart contracts is not that's not fintech. That's not finance. So yeah, I mean, it's a bit of a shady one, but I wouldn't necessarily go all maximalist on one side or the other. But I think that it is lazy analytics to do that.
Yeah, fair. That's a fair assessment. All right, let me do a little quick shout out to the people that are tuned in, because we often tend to forget this part.
Yeah,
but
sorry.
anyway.
Yeah, that's my fault. That's also me.
Yeah, but no worries. Thanks to those tuning in. I guess from the Philippines, from those from the UK, Asia, or even Australia, you know, and wherever you found us, YouTube, Facebook, Twitter, Instagram. I don't know if you're on Instagram, Luke, but
No,
I'm very, very inactive. Okay, so probably not Instagram then.
Just Twitter. I'm only on Twitter.
So we do these weekly updates. Usually we recap basically what's been happening in the industry for last week. So myself and Luke basically work in the industry. It's basically our day job. We try and kind of share news from what we're kind of touching on, what we're working on, and give our kind of like analysis, kind of, and share some opinions on what's been happening in the week. And typically, the way that this is structured, it's a 1 hour kind of like discussion. Feel free to contribute, to just chime in anytime that you have any questions. It's a completely open discussion. And the way that we normally do it is I bring up a couple of slides of what's happening over here in Asia. So we discuss around this, and then we kind of like open it out to the general public for a general forum discussion at the end. So I'm going to bring up my slides. Are you ready, Luke?
Yep.
Okay. I haven't even briefed you on any of this.
It's all right.
Do you see that?
Yep.
Yeah, so I thought what would be an interesting thing to talk about today actually was China and its involvement in blockchain. And it's something that, I mean, at 100%, anyone that's in the industry has already paid attention to and has already noticed. A ton of news basically been churning out about China's involvement in blockchain. And I just wanted to give some context to why this is. So I mean, the president of China, Xi Jinping, has openly announced that China is actively supporting blockchain initiatives as a technology. As of, I mean, probably even before last year, but I mean, publicly, October 2019 is when he made a formal announcement. And then since then, so we've seen basically in around December time of last year, over 500 blockchain projects were actually active in China, and they were registered with the Chinese government agency, the Chinese Cyber Administration Office. And there are just a huge number of Chinese backed, so it's either state-backed or privatized companies or initiatives they're being rolled out, and they are absolutely immense. I'm sure you've heard some of these, right, Luke? So you've got obviously the digital currency, which they're calling the DCEP, digital currency electronic payment. Then you've heard of BSN, the blockchain-based service network. And then Ant Financial itself is launching their own chain. Tencent has been rolling out a number of initiatives, including a wine tracking app. Then you've got CITIC, which is one of the Chinese banks, creating actually a consortium of banks. I think it's 43 banks for a forfeiting solution. So that's trade finance. And then most recently, so that's something I saw this week, they're actually pioneering something in property e-sealing. Have you heard of that?
No. Property e-sealing.
Yeah, so I looked into it a bit, and I haven't done a huge amount of research into it, but it's basically surveillance of your property on the blockchain using live webcams and using live smart contracts. So basically, burglars or people who vandalize your property, right, will be surveyed actively, and your insurance contract will basically be held in the blockchain as basically a smart contract, right? That gets triggered when kind of like acts happen that basically will trigger that smart contract to kind of make payouts. So they're basically they're actively kind of like insuring properties using blockchain initiatives and smart contracts and making settlements completely automated. And apparently, there's over 1 million use cases up until today.
Very cool.
Yeah.
No, I haven't been across that. I've actually tried to stay away from the the China bubble at the moment, purely because, I mean, by definition, it's hardly decentralized, and it's also hard. It's also more difficult with all the opportunities going on in the market at the moment. I think it's easier to get involved in projects and initiatives that are not located in mainland China, as opposed to other stuff that's existing around the world at the moment.
So yeah, so that's an interesting point. And then this week, so what the BSN basically announced is actually they are integrating their data centers with 6 of the public chains. So Ethereum, Tezos, Neo, Novos, EOS, IrisNet, they're basically going to be extending all their the apps or the dApps that basically be going to be running on BSN's network to be able to basically cross over into these public chains. And so it's meant to be kind of like a global kind of access in and out of the Chinese blockchain service network. I mean, that's kind of getting very interesting right now. And I think that's so what I read is basically this could kind of be more twofold. So like on one side, you've got basically, the Chinese companies in China that don't have very easy access to, resources or data outside of China itself. And so once you access or you have that connection to the public chains, that kind of like helps Chinese companies access, data and resources outside of China. But then at the same time, you've got the flip side of that, which is everyone being able to actually get into China, right? So you've got people going through the public chains to be able to get onto the BSN network, and basically access some of the services that basically China has to offer. And one of those is actually financial data from China UnionPay, which, as you know, is, and I think that's something that's hasn't been available in the past.
But it also, I mean, obviously, you've still got to go through that gateway that is, pretty much a state-backed chain, and unless that has been like independently edited, you don't know whether or not they will be able to make changes to data within that chain, without actually it becoming public. So it's good that chains can collaborate, but it's an issue that you need to, if you're looking at being a decentralized person, obviously there's still going to be issues and that you need to go through a gateway in order to. But I mean, hey, look, something's better than nothing, right?
Yeah, absolutely. I mean, I think this is just one approach, and China's obviously been very proactive in basically their approach, and something that's kind of like notable about why they've been so fast at basically expediting kind of like development here is they have very kind of like proactive regulation in terms of the technology itself. So they basically nominated a special economic zone. So I know special economic zones are kind of like a common thing, but what they've done is they've appointed this one city in China, so it's Hainan, as basically a pilot zone where they can just apply all the blockchain initiatives, and if it's successful, they basically want to roll it out nationwide. And so you see like all those big giant companies like Huobi and Baidu going into Hainan to basically go in and test that out. I think that's a very interesting way, right? And so for the government to be so, proactive and supportive of the technology from the start, I guess, and to actually, back it up basically with funding, whether it's like state-backed initiatives or, just setting up that economic zone, that really helps to kind of like spur innovation. And I think that's, I think that's been quite an interesting point to look at, in terms of
the interesting thing to look at it with this, especially from a geopolitical standpoint, is that China is obviously still in a state of growth. Like you generally, a society or like an individual or a society can't operate in both states, as in being defensive and growing. You're either one or the other. You're an open flower or you're a closed bud. You can't be in both states. So what's interesting here is that you can see that because China is exploring new opportunities, they're sort of doing these initiatives and doing this kind of experimentation, whereas the rest of the world is currently in a defensive state. You know what I mean? Like we're all, huddled away because of the current pandemic situation. Whereas, China has the ability now to actually go out and get a massive advantage over the rest of the world by being able to experiment in this way on this stuff. So it means that in 6 months or 12 months, they're going to be way ahead of everyone else as far as learning, technology, understanding where the actual real applications can be, and then how to best utilize them.
And what kind of role do you think that's going to have basically on the kind of like the ecosystem level? Do you think?
I think people from a standpoint from the ecosystem that we operate in, like as in the generally tokens that are being offered publicly and all that kind of stuff, I don't think much of an impact whatsoever. Because obviously investing in Chinese projects is not easy or even possible, because they can't do them. And if they did open them up, it would be difficult for foreigners to invest. So from an investment standpoint, to the average human being like you and I, outside of China, not much of a difference. But from a how to gain more productivity out of a society, how to make things simpler, how to improve things for people, I think China will be ahead, and that can lead to other advantages for a society as well, because obviously, any country's governed by their productivity and their economy, and then that then feeds into other things. So the more productive and the more stable an economy, and the more it grows, then the more a country can put into other things, including things like the military or scientific research and all these other kind of things that make them more advanced. So if China is able to better harness blockchain technology to improve not only their economy, but basically cutting out wasteful things and making it more efficient with blockchain tech, it means that they will then have more resources to spend in other things, which makes them more productive and blah, blah, blah. So I think that if they have the ability to do these experiments now, it shows that they're in a state of growth, while the rest of us are all hunkered down in their houses, not able to leave and do, and then governments as well aren't in other countries are not going to be taking these initiatives at the same time, because they're in a state of defense. Is in we're all closed up in a bud, not trying to, basically trying to make a current situation not worse. Whereas I think if this would indicate that China's in a situation where it has the ability to, they're actually open and they're happy to grow and try new things. You don't try new things when you're being defensive, basically, is what I'm saying.
Yeah, that's a very interesting point. The other thing is, I read this quote actually from the the founder of NEO, so Da Hongfei, and he was saying that basically, the integration basically into the 6 public chains, and they plan to actually integrate even more public chains in the future. And the idea around that is actually, so what's usually censored or kind of like restricted in China is not, obviously not as at all restricted in other countries. And so he was saying that basically, apps like TikTok in the past, they may have been like frowned upon within China itself, but were very successful to launch outside of China. And he believes that basically blockchain, by having open access to kind of like public blockchains, it provides basically that kind of like the coverage outside of the country, and basically for Chinese kind of companies basically to be able to experiment outside of with less restrictions. I think that's a very interesting point to look at.
Definitely.
Yeah. Well, so definitely something to keep an eye on, and it's basic news coming out from China on pretty much almost a daily basis right now. And something I noticed actually, so I don't know if you follow Decrypt, so the consensus-based news outlet, but they've actually set up a whole new section just dedicated to Chinese news that's coming out.
Oh, wow.
So I mean, I think that basically suggests that there's that much content being published, and that's going to be something to look forward to focus on in the future. All right, let me push on. Going to go on to the next slide. Let me know if you can see this.
Yep.
All right. Have you heard about this one?
No. My week has been way too. To be honest with you, I haven't even been looking at Australian news. I haven't been looking at non-finance, non-crypto news outside of my bubble, my little DeFi, little bubble for the last week. I'll talk about that after this. But yeah, go.
Yeah, sure. So I mean, this is actually a little bit old now. It was published about just over a week and nearly 2 weeks ago, I think. So basically, one of the crypto exchanges here called PDAX is working together with one of the most fintech forward banks called Union Bank, and they launched a new app, so a new mobile app actually called Bonds.ph, basically in collaboration with the Philippine Bureau of Treasury. And so what this allows is actually it provides Filipinos with an opportunity to purchase the Bureau Treasury's new, what they call the Progresso bonds. So it's a new 5-year, what they call RTB24 bond. And I understand this to be basically a new product that they released in response to COVID. And so what they're doing is they're testing out if retail treasury bonds could be popular, if they can be economically viable, and whether an app is the suitable way basically to actually sell this. So it's basically very proof of concept, but it's very progressive, right? And it basically, I mean, it's the first time I've heard of anyone selling treasury bonds. I mean, I'm not an expert in treasury bonds at all, but it's the first time I've ever heard of, any country offering treasury bonds through a mobile app. And the minimum that you can buy into these treasury bonds is 5,000 pesos. So 5,000 pesos is about 100 US today.
Yeah, $100, yeah.
Any thoughts on that?
I mean, it's good from a technology standpoint, but it's also my risk assessment brain would then say, for what reason does what are the treasuries backed against? Are they Union Bank treasuries or are they government treasuries?
They're government
bonds.
Yeah, they're
government bonds. My concern would be, I mean, the last time that a government would only be doing bond stuff. Last time, like government during war, when they need money to go build, bombs and things like that. So I would honestly, my big concern would be, why is the government getting the public to buy bonds from the government? Not many countries. I mean, if you have a look at the last time major governments went out and from the public, it was war bonds in World War II. I don't know if they did it during Vietnam, but that was one of the major drives. And anyone who's watched a Captain America movie, they obviously make a bit of a joke about that as well. But I would be concerned, number one, by why a government is raising money from their people. Generally, especially their, you know what I mean? Like you're going to the retail level of investor, which means that, in my head, it means that you've exhausted all opportunities with the institutional and the HNW, and you've come all the way down to the very, very base layer of the pyramid to try to sell your bonds. That would be my only concern. But people also like a safe haven, so I mean, it might not be bad, but I mean, that would be my thought process, looking at it at a BAM, not really reading into it.
Yeah, I mean, that's a fair comment. I mean, the way it's been phrased, it looks like basically a technological proof of concept. I mean, I have absolutely no idea how much they're actually anticipated to raise from this. And to be honest, I haven't seen it kind of plastered all over the news, but you see it kind of like more in the technological news outlets. So just as like something like very progressive. And, you know, it might be more of a why not, as opposed to, does this make sense kind of thing. So, you know, if they can try it out, then they'll just want to see, like, test the waters, see if anyone's actually buying into this or not. But I mean, you make a very valid point. I mean, like, yeah. And that's what we said. Like, it's the first time we've ever seen a country basically sell retail level bonds. And like, for
well, in the past, people do it, but it for me, it doesn't. Look, it could be just like, cool, we're going to develop this up so that people can do this stuff, so that, you know, basic Filipinos get access to finance products that they haven't had access to before. Sure, that could be one thing. Maybe that the idea is that they absorb, people's money through a legitimate means, so that people don't do stupid things like investing in Forsage. So it could be something like that, or like a lot of the scams that exist out there, especially in the financial space in the Philippines. So it could be, we'll try to absorb some of that investment dollar in a legitimate way, so that people don't go and spend it on stupid things, maybe. But I mean, who knows? Who knows what the motivation is without looking at the reasons behind it?
Yeah, that's fair enough. The other thing is, the first thing that comes to my mind when I think of bonds is, so what I understand from bonds is that, typically you want to get into bonds when the economy, or like when the stock market isn't doing well. So like bonds is usually, correct me if I'm wrong, like Luke, you have more experience here, but like basically when the stock market looks like it's going to go down, you basically want to be hedging into bonds. Bonds are essentially what you look at. It's generally a RFR, which is a risk-free rate. So the idea behind something like a bond is that it's risk-free return, like it's an RFR, risk-free rate. What is the risk-free rate of this investment? And a lot of investment products use the RFR to talk about how they're going to outperform RFR. Because it's like, if I put my money in, into this, at least I'm going to earn, I don't know what it would be, but let's call it 2%. 2% is better than nothing, and because it's a government bond, and you're doing it in that government's currency. So, like, obviously, any government will back up its currency. So, for example, in the Philippines government is always going to back up the peso. So, putting your peso into a government bond is the most risk-free you can possibly get for a Filipino holding pesos. In the same way that, getting a US government bond with US dollars is the most risk-free thing you can do with US dollars. So it is a risk-free, a fairly risk-free way to put your money into something. I'm not sure what the terms of this bond are, but generally bonds are usually a fixed term. However, you can get out early by selling that bond to someone else
But the one thing that the price of your bond is dependent on is interest rates. So if you buy a 2% bond and then the current bond rate goes to 2.5% or 3%, interest rates go up, means that value of that bond is actually lower. It's still risk-free, but it's more the opportunity cost. So, for example, why would I invest in a 2% bond when I can get a 3% bond? And the opportunity cost of investing in a 2% bond now, when there might be a 3% bond later, is obviously fairly high, because obviously it's from 2% to 3% is like, what, 50% difference from a return perspective. So it's sorry, I'm getting too deep. So yes, it is a risk-free way, and I think that the most important thing to look at is what is the motivation for that being offered. Like, number one, is it the government trying to in a altruistic way, like in a benevolent way, trying to make bond investing more available to Filipinos, and why? And rather than, is the Philippine government trying to get more money out of the public to ship into their own bonds? So, I mean, either way, the investment should be fairly safe. The only issue would be is if it's for the latter, is that the underlying value of the peso will decrease if the government's basically just going on a fundraising spree and they need to raise from the general population. What will happen is the underlying value of the peso will decrease, which will affect everybody anyway, whether you invest in the bond or not. So that would be the only thing I would be looking at.
Good insights. Yeah, that's very interesting. Let's continue to watch that, and I'll keep you posted if I find some more motivational reasons why such a product exists.
But it could be good. And if it's Union Bank,
I'm going to switch on to the last
tech, so yeah. Sure. Oh, this is Jason.
So I know this is the hard topic. Yeah, exactly. This is the hard topic that I think you've been waiting all week to share with the community, right? And so basically to just assess basically what are the current crypto opportunities out there. What's the investment landscape look like? And obviously, one of our community partners out there, so Bitcoin Malaysia, is hosting a DeFi week starting next Monday. So we're completely 100% shilling his event because it's free, and you have absolutely zero to lose. But they've got over 9 or 10 speakers next week. So he's put on, so Jason's put in a huge amount of work basically to gather all the speakers, and it's basically not an event to miss. But basically every day there's a different speaker. You tune into YouTube, watch basically the speakers talk about their project, how to get involved. So that's about yield farming. So look out for the Southeast Asia DeFi week on Eventbrite. I'll post the link actually in the comments.
That's actually going to be a good event. And I think that we're both media partners. I can see a Blocksiders logo in there somewhere.
Yes, indeed.
But there's a few very interesting projects in there. I mean, you can see Compound, Aave, Balancer, Curve. I can barely read that, but I think that there's Mu, MakerDAO. I know one of the projects that I'm quite excited about that is in there is Dia. So actually, I'll talk about Dia afterwards, because that's when I'm going to talk about bonding curves and how that works, because they're currently going through a fundraise, and that's a really interesting project. So there's a number of good projects that if you're interested in the space, these guys do an absolutely brilliant job of pulling these things. The Bitcoin Malaysia guys, and I'd probably say that, I don't know if he's watching now or not, I'll say it anyway, is Jason is probably one of the most hardworking guys in the Southeast Asia blockchain space, and he doesn't get the recognition he deserves sometimes, but he is one of the most hardworking people in that ecosystem that I know. So yeah. But I will be honest. I mean, one of the reasons why Dia is actually presenting is because I was like, yeah, we need to get Dia in here, because there's all these massive DeFi players, and that Dia project. If put it this way, and this isn't financial advice, I'm in trouble for this, but if you missed out on Chainlink, DIA may be your second chance at getting into something.
Well, are you going to stake something on that? That's a big.
I'm invested in DIA. I'll put that out there. I'm invested in DIA. I'm not suggesting that people should follow my investment advice, but I'm invested in DIA. Just out there. But it's going to be an interesting project.
I got it.
Team. Sorry.
I got into DIA last night as well.
Oh, nice. Oh, so you got in before. It's about to crack the 380 mark, so on their bonding curve, so it should be interesting.
Jesus.
See if I might have already. Some people, the guys who got in at the start managed to pick it up at 5 cents, I think. Some lucky people have already will almost do 100x off the gate before it's even listed. Well, it's listed, but once the sale's over, it's insane. So yeah, that's all I've got to say about that one. But it'll be a good event. I think it'll be a really, really good event. And because it's free, I think that you're going to learn about. The one thing I would take from it is not looking at projects to invest in. I would be looking at it to see what the current leading projects, and a few of those are there, namely Compound, Aave, Balance, Curve, New. A lot of these big players are actually are going to be presenting at this event. So what you want to be doing is saying, what are these guys working on, and where are the opportunities going to be in the future? It might not be DeFi, it might be some other part of blockchain. But I mean, DeFi is going to be the flavor of the month for the next 6 to 12 months, I think.
So that's an interesting discussion actually, because I've seen a lot of sentiment out there basically that, because DeFi basically was the first part of the ecosystem to basically pop off before BTC and ETH basically blew up as well. So some people are saying that DeFi may have had its its initial boom, and it might have a bit more of a consolidation phase right now. I mean, what are your thoughts there? You think there's still
I don't reckon it's at that. And that's me as someone who traded through 2016, 17, 18, 19, and now. Ian, to answer your question, so I'm just answering this question that's come through. Ian, to answer your question, road to $3, mate. I think today it's going to get cracked. I think 380 is the next barrier on the bonding curve. And last time I read, which was a few hours ago, there was only 130K that needed to be bought to breach that. So that was a few hours ago. So I'm pretty certain today or tonight, D is going to crack 380. So I think $3 is gone. And we've still 10 days to go. So I mean, the big thing, if you believe in DIA, what you really want to see is no one else buying, and then the remainder of supply getting burnt, and then the buying starting after the 18th when the sale ends. But who knows? So back to the point though, I think that we're not at a phase. I mean, like if you're in the industry like you and I, you've been seeing this DeFi stuff for the last few months, and you've seen the craze. Whereas in the public space, it's sort of still very new. And I don't think that a lot of people, I think there's a lot of people that will, that really know about it outside of people who are already in crypto. I don't see this as being a mainstream thing. When you see it being pushed in, in Australia in like news.com, or, if you're in this, mainstream media attention, when you're actually starting to get to that level, when the average human being is talking about it, and that age-old thing where the cab drivers are telling you to get into Aave, and, you got to do this, and then you got to lend your Aave into Compound and then shift that over to Balancer and earn yield, blah, blah, blah. So when you start hearing that, sure, we're in a bubble. At the moment, when you think about it, that probably DeFi is one of the first real world impact use cases of crypto and blockchain that we've seen in a while. And when you consider the fact that of a market cap of what we're at 300 billion odd now, 4 billion is tied up into DeFi, which means that there is an immense amount of crap still on the other side of the scale. And DeFi only makes up a very small space. I think the DeFi space should be in multiples of billions of where it is now, just purely because of the stuff that it can do. I mean, we already talked about this the other week with Compound. Compound, Aave, not necessarily Balancer from a liquidity perspective, from a trading perspective. We've got all these things coming out that can greatly optimize not only crypto and the way it works, but the finance space. I mean, for example, if you have Ethereum, there's how much, there are billions and billions of dollars of Ethereum still not in the DeFi sector. And that could be put in the DeFi sector where people would earn an interest rate by owning their Ethereum and still getting the same benefits of just sitting and holding it anyway. There's so many people hodling stuff out there that they could be doing they could enter into the DeFi space and actually earn a return on. And there's so many projects doing this now where it actually makes it's obscene not to do it. Like, you're crazy not to do it. And we haven't hit that period of that state where we're actually seeing even crypto level adoption, where people in the crypto space are really adopting this stuff, because it is a bit more complex than opening up an exchange with Binance and hoping for the best. So I think that until we actually see people in the real world start to talk about it, we're not in a bubble.
So it's one of the questions also, in terms of yields, locking up your funds into DeFi products, right? You might as well sometimes just be holding the token itself, and you might be making a few percent less, but in terms of risk, the risk is much less than actually putting your funds into a smart contract, which is
you can release quickly enough. It doesn't take. If you transact, you might be waiting 5 minutes for transaction times to exit the smart contract, but there's no problems with liquidity in that case. Okay, so for example, one project off the top of my head, there's two, Swingby and Flexer. Well, I've talked about Flexer a number of times on various things, but Flexer's returning about 7% per annum at the moment. Not high, not low, but it's still a small cap. It's not really a small cap project, but it's still early day project. That ROI will get higher as the price increases. Now, if you own Flexer tokens and you are not staking them, it is insanity. Why would you not take that extra 5 to 6% per annum when just free tokens just for doing literally nothing, when literally exiting them from staking takes 5 seconds? You go to your wallet, go to the Flexer mainnet, and then you go, unstake. It takes a couple of blocks in the Ethereum network to then unstake them. You're out. Then you can sell them at market. So if you're just holding them in your wallet anyway, it's kind of irrelevant. Swingby, if you're on Bitmax, Swingby is returning a 50% APR, which means it's an asset. It's your return on asset is 50%. So it means that if you own 1,000 Swingby and they don't move, you're going to earn 500 Swingby in 12 months. By staking them on Bitmax. And Bitmax is an exchange, which means that if you own Swingby and you don't have it on Bitmax staking, you are missing out on a 50% return on tokens in a year, which is insane. So, and a lot of people don't, the vast majority of the networks. So essentially, if Swingby doesn't move, you're going to make 50%. If Swingby doubles, you're going to make 100%. Happy days. If Swingby halves, you're going to break even. Or just under break even. So it's not only in regards to chasing a return, but it can also be risk mitigation on the other side. And I think that processes like that, if you're not being a participant, if you're planning on being a participant, or you're going to hold something for longer than a month, if you're not staking or taking advantage of DeFi, or you're not doing any of these things, you are, it could be a risk mitigation factor. For example, if you're going to earn, 10% on putting your Ethereum somewhere, Yeah, I think Ian and Emmanuel and I might be in the same groups because he's loving everything I'm talking about. But it's like if you're not doing these things, then you're essentially pissing money up against the wall. You're wasting your time, taking advantage of all the opportunities that exist in this market. So, if you think that you've got a bunch of Ethereum and you can earn 3% or 4% on it, it basically means that over 12% over a year, if Ethereum goes up, that 3 or 4% is much, much more. If it goes down, it means you've mitigated a certain degree of that risk. I mean, put it this way, if you Ethereum at $1,500 and you held and you had it and you were holding and you were just holding the whole way down and dealing, a lot of people did. If you had access to a 4% ROI per annum, I mean, look, put it this way, you're not going to be at break even, but you're going to be slightly closer if you use DeFi. Whereas if you were staking your Ethereum,
it's something that's a bit scary right now. Yeah, something that's a bit scary right now is what's trending with the exchanges is actually they're encouraging you to basically leave funds on the exchange, and obviously, we've all been educated not to leave funds on the exchange because not your keys, right? So, but yeah, I mean, look at that. Exactly what you said, 50% APY or APR, just from leaving funds on exchange. And I've seen that also on Hotbit. Hotbit does the same. So you just literally leave it in your wallet and it's automatically considered part of your investment portfolio and you start earning interest on that straight away. Binance does the same. Like you hold Tezos in your wallet and it's automatically staked, and so all of these exchanges are basically encouraging you to leave funds in the exchange. And I think it's a little bit scary right now, actually.
Yeah, but I mean, if anyone has, and this is a shameless plug, and I'm really sorry, but not really. If you haven't seen my interview with Charles Reed on my channel, we actually talk about this, where we talk about decentralized exchanges and the amount of the pie that decentralized exchanges are sort of taking from the centralized exchanges. So they need a reason for people to stay on board. And if they're not, you know what I mean? Like if you're using, I've got to say that I've done 10 times more transactions on Uniswap than I have on any other platform in the past few months. So I think that the exchanges would know this, and because, as you know, Uniswap doesn't operate the same as a normal exchange. It's all user provided liquidity. All fees go back to users. There are bonuses if you're part of a liquidity pool on products like Aleph offer a liquidity pool bonus. I know Ample through the Geyser offer a liquidity pool bonus. So there's a number of different operators that are encouraging people to provide liquidity on Uniswap. So that's not only good for Uniswap, it's also good for the community. And exchanges being fairly predatory in regards to projects that they've listed. Like, exchanges require not only a listing fee, but they require a large amount of tokens to provide liquidity, which the exchange owns. And so the exchanges to list on an exchange can sometimes cost a business millions of dollars. So Uniswap essentially has allowed people to list projects for cheap. Might be a audience, but it's still cutting the lunch of a lot of exchanges, not only through listing, but also through liquidity. Like, they're not earning fees off trading. So it's probably required a lot of exchanges to really have a look at their business model and have a look at ways in which they and their customer base from being lost to major competitors like Uniswap and other decentralized exchanges.
Do you think this is the reason why exchanges like Binance are starting to reintroduce their IEOs? Have you started to see that?
Yeah, there's been a few that have come out, few IEOs, but I think that the market is maybe a bit more ripe for that kind of thing. However, I think doing an IEO on Binance is not the correct strategy for a project to do, because pretty much once you're on Binance, that's the apex, right? Like that's you've got your Binance listing, you're pretty much done.
Yeah.
Yeah, sort of, you're not really you sort of you lose all your hype and everyone will just forget about you, because don't forget that Binance still listed ridiculous amount of coins. And the biggest issue I see with Binance at the moment is they're trying to become that all-in-one. There's only one. You only need one exchange. Like, I just got an email the other day saying that I can use Binance Australia and I can get AUD straight into Binance now. Great. Now, that is a problem, especially in a decentralized world where you have one player, one exchange. And especially now, if people are being encouraged to stake on an exchange or, all these other different things, I think it's a bit of a concern. To be honest with you, I think the best thing in the world that's ever happened to the industry is the introduction of decentralized exchanges. It hasn't been good for the Ethereum network at the moment. I'm going to say it again, I'm going to blame Forsage for that at the moment, and a lot of other scammy projects and things that have been eating up the ETH network. But something like Uniswap means that you just connect your wallet, you authorize your wallet to make transactions with Uniswap on a one-time basis each time. It can be a bit more time consuming. You don't get filled as fast. Sometimes the slippage is obscene. Like, you might make an order and you'll move the price 5%. But yes, Ian, I'll just answer Ian's question. Ian, if you actually have a look at the interview I do with Charlie, we actually talk about Orion Protocol as well. That was another project he was involved in. For those of you who don't know, Orion is a sort of an inter-exchange brokerage platform that aims to share liquidity between exchanges and rewards exchanges by participating in the network. So essentially what they're trying to do is get the benefits of a decentralized exchange while also allowing the centralized exchanges to participate, which means that obviously the idea is that they'll still be able to stay in business as the decentralized exchanges increase. Interesting project. So that's gone really well. I think that was at a private sale of about 15 cents, and it's now at about $2 to $3, I think. So fairly good ROI on that one. And yes, it was on BitMax. And you can exchange, I think the APY on Ryan is about 35%. So not quite as good as Swingby, but it's still fairly good. So, yeah, I mean, I think that it'll be interesting to see how this industry plays out, especially with all the benefits that DeFi has done. But again, the centralized exchanges, there's nothing good can come from the industry when the average user just has to sign up to one exchange. In this case, we'd be talking about Binance, and then just stay there. That's actually kind of against what the industry is about, which is decentralization, that people should be in control of their funds. And because a lot of people are lazy, they may never create their own wallet. They may never learn how to use MetaMask. They may never participate in the financial revolution that the industry is trying to create in the way that is intended. Instead, they just create another account with another pseudo bank and end up in the same cycle again, which isn't good.
That's true.
So,
you have to be really
I think that the one thing I've always said, and I even say this in my video about it, is that the one good thing that Forsage did, other than scamming people, was that it taught people it encouraged people to go out, buy Ethereum, go learn how to use it, commit, interact with a smart contract, blah, 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 blah. Now, the good thing about it was the average human being would have only been scammed for about $15. Not a big deal. That is a fairly cheap lesson in forcing yourself to go and set up your own wallet and learn how to use MetaMask and interact with a smart contract. So it's not too bad. So that's the way I would view it. So it's good in a way. There is a positive. I mean, something after they're done screwing up my Ethereum fees, there's a positive. So I think that that is a more positive impact on the industry than people being able to just create a Binance account, get their bank account linked up, send money in and buy crypto through Binance and leave it there forever and then eventually sell it back for their home currency. That's not what this is about. That's not what this industry has been created for, and it's not what a lot of people are working on. So I think that the local focused exchanges, for example, I'm not sure what the local Filipino exchanges are, but guys like Luno, Yeah, well, yeah. And then I know that the independent reserve in Australia, I don't know if BTC exchange is still a thing. There's a number of other ones. I use independent reserve personally, but whatever. And then there's, tokenize and Synergy and Luno in Malaysia. In Indonesia, you've got like Toko Crypto, Indodax, obviously, and then a number of other different exchanges there. There's I think there's about 11. So Reckoning Coup, I think, is number 2. And so you've got all these local exchanges that I think really need to be supported to keep the industry decentralized. And then, you can still have your Binance account, but just don't make it your only one. Otherwise, what the hell do we just work on for the past 5 years?
Yeah, that's true. That's true. Hey, Luke, so I've got a question, and I'm pretty sure the community's here to also hear our take on this as well, right? So, obviously, so BTC and ETH have both kind of broken through some major resistances recently. And obviously, we had the DeFi cycle that just kind of like broke out before even BTC even, broke 10K. So how do you kind of like see this playing out now? I mean, I know it's not going to be a straight line up. I guess the sentiment right now is quite bullish. Like generally, most people are quite bullish. We expect to see more volume, especially more retail volume, and hopefully institutional volume kind of coming into the markets in the coming weeks or months. Like where do you see this? How do you see this playing out? You see, like,
I'm just going to share my screen if you want to put that up.
Yeah, absolutely. This is what's all about.
So my favorite tool of all of them in the whole wide world is the Gann box. People like Fibonacci ratios. I've never really been a Fibonacci person trading, but each to their own. If we have a look at the run up, the big concern that we have is, and I literally have not checked this. I just checked it then. For those who are asking, this is not a low. That is a low. This is sideways movement, and then we have the takeoff. But that is not a low. That is a low. Anyway, from this low, we've basically had a look at the March low, which was the post, COVID announcement, when we all, at this date was the date where the 11th was where it was called a global pandemic and everything shit the bed. Then we had this retracement, and I think those of you who would have been following my stuff, this is around the time that I made that COVID video. Anyway, so this is where we're at now. Now, for my technical analysis skills, I don't believe in complex lines and throwing lines all over a chart. I go pretty simple. After 14 years of trading, I go as simple as I can. This is a bit of a concern because we've seen that first range up. I'll just close this ad. The first range up is basically the size of this box, and we've only hit 50%. If we want to go a bit more complex, we can see that in time, it's taken, we'll go 50%. So it's gone to the 50% point in time. If we then have a look at it when we scale this up, let's go to this low again. Okay, so it took, if we're going to have a look, it took 100% in time. So it meant that it took, for the time that it took for this movement to happen, we have not yet even taken the amount of time necessary to go half the amount up. Okay, so look, we could see a bit of a sign of weakness here. However, if it busts through this 1190, and this is on Bitstamp, but the numbers are fairly consistent, give or take $20. If it can break through this, level at $12,000, if it can break its head through $12,000, we're laughing. It's going to probably keep going. However, if it can't butt its head through this, then we could see another downward movement. That's pretty much where it's in. So we're waiting at the moment. But I'm not necessarily going to be saying that I'm not crazy bullish at the moment on Bitcoin. I'd much rather see Bitcoin fall and more money come into the alts. The same sort of deal with Ethereum. This is my long-term chart that I look at with Ethereum. Where's my, okay, go away. And where's my Zoom?
For you some subscriptions.
Oh my! You never pay for something that's free. Yet again, we can see a similar sort of thing with Ethereum, except that the good thing about Ethereum is that the amount of time it's taken to go up is actually quite quick compared to the time that it took to get to, say, this point. I'm more bullish on Ethereum than I am on Bitcoin from an ROI perspective, purely from the sense that more like Ethereum is actually being used by things. When I do international payments, when I'm paying my developers for my business, I'm using Ethereum because it's more reliable than Bitcoin. The transactions happen faster. I might pay a little bit more in fees, but I just prefer it because it's fast and you can do it automatically. The other thing as well is that there's more people are using smart contracts now than were the case in 2017. So it means that there's more utilization, as in it's a product that's actually being used for the reason it's designed to be used for. Now, this was still increasing last time I did a presentation on it, which was maybe late 2019. So this is before the current glut or the current increase in gas fees. So, I think we're at like a 500% increase in smart contract calls from 2017 to 2019. And that has gone, I'd probably say it's gone exponential since then. So people are actually using the Ethereum network to do smart contracts, and we're still seeing more projects being listed, and people are now using them for governance tokens and all these cool things. And we're now seeing a lot of the really cool stuff that Ethereum does was designed to do being used. Bullish on Ethereum for the long term than I am for Bitcoin, but that's because I think that Ethereum is more usable than Bitcoin.
So let's say Bitcoin takes a turn now to the downside. I mean, in your kind of like your own strategy, and this is not an investment advice, of course, from either of us. But would you still hold your positions, for like low market cap coins, things like the?
Generally, what happens is that money will flow from Bitcoin to the alts. That's generally how it goes. If it doesn't, then we're all in a bit of trouble. But I think that if you held Bitcoin for this run and you weren't dumping some of that into if you weren't diversifying that or exiting. I don't know what you're doing. But the major resistance point on the downside, obviously this big blue line that I've drawn here, as you can see, Bitcoin is constantly, sort of bumping its head in the last, since last year, bumping. It sort of tested it here a little bit on the way down. So it's always bumping its head on this, about $10,500 mark. So I kept bumping its head on the way up. It's now... a common phrase in trading is old tops become new bottoms. So it would be nice to see a retracement down, maybe to this 25% level. Oh, hi, Cake. Thank you. To this 25% level, and then it would be good to see what happens there. So that would be my area to look out for. And we'll just see what happens. But the only other chart I wanted to look at was this project that I talk about all the time, which is Aleph, and that's gone through, I think I originally started talking about it down here, and then it's gone through this massive run up, and then we're now seeing we've sort of seen some retrace to I haven't got more of my charts on, I only pulled this up, but we're now seeing this on the way up as well. There's another one. This is, and they've recently done some work with a number of major players like, who is it? Chainlink. They're going to be used for Chainlink for their for the stuff that they do. So that's another project that I'm always keeping my eye on. And I think the last thing, though, I wanted to talk about was, no, we'll have to talk about it next week because we've already gone over an hour. I don't want to waste everyone's time. We can talk about it later. It's still happening today. But stay tuned next week. We're going to talk about fundraising and bonding curves. I'll talk about that next week.
Ooh la la. Yeah, that's juicy stuff to get into.
Yeah, we'll just have to.
We are indeed up to our. We are indeed up to our full hour. I hope that was useful for those that were tuning in today. Ian, thanks for all the participation. That's amazing, man. And we spread the word to get more people involved. We're doing this every week. It's always at 6 p.m. Philippines time. And if you're not already, please subscribe to our YouTube. So for us, that's BlockchainSpace. For Luke, that's Blocksiders.
I did not know my channel, man. 400 subscribers and growing. Yeah, buddy.
So Luke does some great insightful kind of like research videos. Like he really digs into some of the projects. So you definitely go check out Blocksiders and have a look at the content that's on there.
And Monday's going to be about Ampleforth. If you're involved in that project, I do the absolutely. I try to be as impartial as I can, but yeah, I always try. We'll see how we go. But Ampleforth is going to be out on Monday.
Yeah, perfect. Great. Okay. And then have a great weekend, everyone. And we'll catch you next week.
All right. See you guys.